Let's take a look at some charts on Dash from this week's article on Brave New Coin. So I haven't talked about Dash in a few months here, but it's quietly moving up and to the right for the on-chain metrics, not so much for price. Bit of a divergence there. Talk about price at the end. But if we look at some on-chain metrics, Dash is leading privacy coins in transactions per day and daily active addresses. Is it fair to compare all these coins together? No, not really. They're all fairly individual, unique relative to each other. They have different on-chain capabilities going on. If you look at Monero and Grin, you can't even see their daily active addresses or daily transaction volume. So we don't actually know if this is an all-time high, or if Dash has a relative high compared to Monero or Grin, just because we can't see what's going on here. Dash also has on-chain mixing, which will juice daily active addresses and transactions per day, I believe. So these look relatively high amongst the peers, when in reality it may just be a byproduct of how the chain works. If you look at the inflation rate for Dash, it has continued to decrease over the past few years and will continue to do so. It's currently below 6%, which is higher than ETH, higher than Ethereum. So maybe that's part of the reason why the price is continuing to decline. Higher than Monero, higher than ETH. But that could be why price is continuing to decline. Just inflation is taking its toll right now on the supply-demand curve. If you look at hash rate difficulty, hash rate has ballooned over the past 10 months, 11 months. Continues to just push all-time highs month over month. Dash is a hybrid proof of work, proof of stake network. So even despite that, hash rate continues to increase, which says miners think they can make a profit on Dash here at these levels. If we look at the available ASICs, essentially half of them are at break even or profit. The maximum profit at 4 cents per kilowatt hour is not substantial, but it does mine 6 things as far as which algorithm it can adjust between. So typically how this works is that it will switch between whichever is most profitable. This is a super old ASIC. I doubt many of these even exist at this point. Super low hash rate. So this profitability probably isn't Dash. This is probably the most reasonable ASIC that still exists in abundance from November 2019. It just mines the Dash algorithm. So the hash rate could be hidden ASICs that haven't been announced yet, but I somehow doubt that. I think it's just miners seeing an edge to deploy capital and get a return. If we look at Dash compared to all other proof of stake or staking coins with staking, it's on the higher side of most of them, but it's definitely behind ADA, XTZ, Atom, EOS, Algo, Band. So it's probably between 10th and 15th on the list, but it's bigger than most of the proof of stake coins as far as how much is being held. Masternodes actually hit an all-time high earlier this month at 5,000. So again, there's kind of a weirdness of like this coin is super old and not too much is happening with it, but hash rate's roofing, masternodes keep increasing. So something's going on behind the scenes that isn't exactly readily apparent. If we look at transactions per day on Private Send, which is their optional privacy solution, continues to increase year over year, currently at all-time highs, although it's a relatively small percentage of total transactions on a day-to-day basis. It still continues to increase. Mixing transactions still continue to increase, and this will affect on-chain metrics like transactions per day and daily active addresses, I believe. So lots of mixing going on there. If we look at their Treasury component, still chugging along. To me, most of this is PR advertisement related, not necessarily like chain improvement or chain development, which is fine. If anything, it says they'll continue to have like Dash advertisements in like Latin America and Africa just forever in perpetuity because they have a treasury to do so. So they're going to continue to promote the coin in that fashion. If we look at transactions per day and mean transaction size, transactions per day are slowly, steadily rising. These spikes are mainly stress tests, not necessarily organic activity, but transactions per day are at an effective all-time high relative to what's been sustained, and transaction sizes are kind of just flat. No real bullish or bearishness about that, but transactions increasing is definitely bullish, which is probably related to the on-chain mixing as well as the masternodes. Just all the stuff put together is pushing this hash rate. More ASICs, more miners, more wallets there. That's all pushing that up and to the right. Active addresses, again, up and to the right at all-time highs. No surprise there. Most of this stuff is kind of hand in hand, mining active addresses. So again, there's a divergence between price and on-chain stuff here because active addresses have never been higher and price is kind of just doing a bunch of nothing sideways. NVT continues to decline month over month, arguably. You know, it's kind of just sideways meandering. Nothing super bullish there, but it's definitely not mega bearish as price would lead you to believe. NVT is an inverse metric of economic utility relative to market cap. So if there's a lot of on-chain activity and market cap is declining, NVT should go down relatively. If you look at MVRV, another metric for on-chain activity versus market cap, MVRV has been unable to sustain highs over the past 2 years, really, ever since peaking with price. So you can see how it peaked and then immediately dropped. What you're looking for here, to me, is an increase in MVRV to sort of show that a bull run can begin. You don't want MVRV massively high because then it says price is too high relative to on-chain activity, again, similar to NVT. You want MVRV to remain low. You want NVT to remain low. But you also want it to be able to sustain these overbought conditions, which hasn't been the case the past 2 years. And if we look at Google Trends, just kind of flat over the past 2 years, no surprises there. Yeah, to me, I don't really hear too much on a day-to-day basis for Dash other than their own sort of PR-related stuff on their Twitter account. Nothing, no real big stories I hear on any major crypto news outlet lately from for Dash. Anecdotal evidence, but the Google Trends supports my thesis there. If you look at some technicals here, 50, 200 EMAs, yearly pivots, VPVR, RSI. Kind of very similar to Ripple in a sense in that VPVR is showing a massive level for volume at the current price. So it's kind of a make it or break it situation. If it breaks down below, it's probably going to 40 or lower. If it goes above, it's probably going to 160 or higher. Right now, it's definitely leaning on the downside, but overall, it's pretty neutral. You can see just the lows have just been smacked super low. Any buy has been immediately smacked down. That could be miners looking for ROI. It could be Masternodes looking to cash out some of their proof of stake stuff. It could be a combination of both of those, but there's no real massive buying pressure over the past 2 years. Again, just kind of sideways, random walk all over the place. Cloud on the daily doubled settings is also bearish right now, leaning bearish. Definitely not a long entry signal. Longs would trigger above 84, 85. And even then, these Kumo breakouts have all been to the upside, have all been short-lived. You know, they've all just kind of gone nowhere quickly, whereas the downside has been sustained and prolonged. And lastly, if we look at Dash BTC hitting 5-year lows, 6-year lows, it's really kind of shocking with this price history. And Ripple's the same, Doge is the same. All these alt players are just getting absolutely demolished. Anything with 5 years of price history or more is revisiting those 2014, 2015, 2016 levels, just showing that BTC is continuing to dominate the crypto ecosystem, continuing to gain relative market share over altcoins. And to me, it just says your money is better in BTC than most altcoins right now, at least in the near term. What you want to see for these is just a continued massive bleed, but you want to see spiking capitulation to signal that sellers have been exhausted. I don't think we're quite there yet for Dash. A spike into like 140,000 sats, whatever this is, 0014, this VPVR level, this previous 2014 consolidation would be a big signal that sellers are probably exhausted at that point, but I don't think we're quite yet there. So bit of a divergence overall from fundamentals and technicals. Fundamentals look the strongest they've ever looked, really. Hash rate all-time high, Masternode all-time high, active address all-time high, transactions per day effective all-time high. Whereas the USD and BTC pairs are bearish and mega bearish. So eventually something will give here. Eventually buyers will step in. I don't think we're there just yet.